Today's a very special day. We have something on the screen here. It's like a countdown for an event called the Halving. So if you don't already know what this is, hopefully by the end of the presentation, you'll understand what this kind of means. So this is another presentation in our Intro to Blockchain series that we're doing this quarter. So we're basically stepping through basic fundamental concepts of like tokens and blockchains, and then eventually you'll be set to get into a little more technical studies if you'd like. So we'll start off with a fun exercise, and then we'll also get into like why people like Bitcoin and some attributes of Bitcoin that are favorable, and eventually the Bitcoin halving, which is happening today. It should happen in the next hour and 10 minutes, as you see on the screen. So yeah. Okay, we'll talk about Bruin Cash first. Has anyone heard of Bruin Cash? Okay, that's because I made it up last night. So let's make a new money together today. So we have a system of money that's called Bruin Cash. It's going to start off with 3 people. It's going to be me, Drew, and Jason. And in this Bruin Cash, everyone's going to start off with 100 Bruin Cash. And since there's 3 of us, the initial supply will be 300 Bruin Cash. And what happens is that every single day at 8 a.m., someone's going to process the transactions we want to make. And then here on the whiteboard, we're going to keep track of everyone's balances. So here you can see this is the Connection Lab whiteboard. And then I have $100 or 100 Bcash, Drew has 100, and Jason also has 100. So every day at 8 a.m., we're going to process transactions. If I want to make a transaction and it's not 8 a.m., what I'm going to do is I'm going to make a sticky note, and then I'm going to write down what I want to do. So in this case, we have the whiteboard. It has everyone's balances, and I want to send Drew 15 Bcash. So I'm going to put that on a sticky note and put that on the whiteboard. And what happens is at 8 a.m., someone's going to come into this room, and then they're going to take off the sticky note from the whiteboard, and it says Alan sends Drew 15. So they're going to subtract 15 from my balance on the whiteboard, and then add 15 to Drew's balance. So now the whiteboard will display 85 for me and 115 for Drew. And when we take off these sticky notes to process them, we're only going to process the valid ones. So if I didn't have 15 Bcash, we wouldn't want this to happen. And once we successfully process a sticky note, we're going to put that into a pile. So in this case, this happened on April 11th. So once this transaction is processed, we're going to put that in a pile for the April 11th transactions. But there's a big problem. Me, Drew, and Jason are not waking up to come here at 8 a.m. So we need an incentive to come here and process those sticky notes on the board. So let's add one. Whoever comes in to process the transactions for the day gets 5 Bruin Cash. So let's reprocess the sticky note now that we have this new rule. So I've added this new rule in green. Whoever comes in to process the transactions for the day gets 5 Bruin Cash. So I'm going to be the one to come in at 8 a.m., and I'm going to process this transaction. So it's going to say that I'm sending Drew 15 Bcash, and so what's going to happen is I'm going to get deducted 15, but I'm also going to get 5 Bcash for processing this transaction because of this rule we've added, because whoever processes it for the day is going to get 5 Bcash. So that's represented by the +5 here, and Drew still gets 15 in the end and ends up with 115. And then we'll also make a note that this pile of sticky notes was processed by me. Okay, so now it's a new day. Drew and Jason, they stay up playing poker against each other. They have an addiction. And at the end of the night, Drew ends up losing 50 Bcash to him. And Jason also owes me 10 Bruin Cash to pay off his boba debts. This manifest is that we have this whiteboard, and then there's going to be 2 sticky notes on it, one saying that Drew needs to send Jason 50 Bcash, and then another one saying that Jason's going to send me 10 Bcash. So let's process this. I wake up at 7 a.m. and I brush my teeth, and I come here, and I'm going to process these 2 sticky notes. So I'm going to look at them. They look legit. Drew has more than 50. Jason has more than 10, so I can process these. And so I take them off, and then now I have a balance of 105. Drew has 65, and Jason has 140. And then we'll also mark this pile as being processed by me. So hopefully this makes sense so far. And then the activity is going to continue. So we can kind of extend this example to an arbitrary number of days. So here we're just looking at a snapshot of piles from April 11th all the way to June 8th. So every single pile is a different day with transactions that happen in a day. And the ones that get processed by the person editing the whiteboard is going to put them in a pile, and then this is what it looks like in the end. So does everyone understand Bruin Cache up to this point? Any questions? It's pretty simple, right? Okay, well, we're done, and if you understand it, then you're about to understand Bitcoin. So let's go back and revisit all these characteristics we had. So instead, we're gonna look at Bitcoin through the lens of Bruin Cache. So instead of being called Bruin Cache, it's called Bitcoin. Instead of 3 people, it's open to all. So any number of people can use Bitcoin. This is what people mean when they say Bitcoin is permissionless. It's that you don't need any permissions to use it with other people. Anyone can join into the ecosystem and use Bitcoin. Instead of having everyone start off with 100 Bruin Cache, everyone starts off with 0 Bitcoin. There's no free lunch here. And because of that, the initial supply is also 0 Bitcoin. Nobody has anything in the very beginning. And the way transactions are processed is it's not happening every day at a determined time like Bruin Cache was. Transactions will be processed approximately every 10 minutes. And I'll get into why this is an approximation later, because it's not always 10 minutes. And everyone's balances, instead of being on this whiteboard here, they're going to be on something called the Bitcoin blockchain. So I'll also explain that. So today's a very special day because there's something called the halving that's happening, and that's when the block reward gets cut in half. And so in our previous example of Bruin Cache, the block reward is whoever came into this room and processed the sticky notes on the board, they got 5 Bruin Cache. What happens in Bitcoin is, depending on the schedule here, whoever processes the transactions for the current block gets a block reward. So in 2009, whoever processed the next block got 50 new Bitcoin. And then after 2012, they got 25. And then that goes on all the way until today, where the 4th halving is happening. So right now, as we speak, every time someone processes a block, they get 6.25 Bitcoin as a block reward. But then after this halving happens in about an hour, each person who processes the next block will only get 3.125. And that is what the halving means. So I mentioned earlier that it's not exactly every 10 minutes, but on average, blocks are processed every 10 minutes, and this is called a block time. So people kind of use this to talk about blockchains. An example of another blockchain is Ethereum, where you would say the block time of Ethereum is 12 seconds. The reason why it's 10 minutes on average and not a completely deterministic time is because there's this concept called proof of work. This gets into more cryptography and computational stuff, but essentially what people are doing is they're rolling a magical dice until they get a magical number, and then once they get that number, they can process that block and then receive the reward for it. So in reality, this magical dice is a function called the SHA-256, and then the magic number that we're trying to roll on this dice is just a special hash that fits certain properties. And so if this was applied to Bruin Cache, what that looks like is, say at 8 a.m. when we want to take and process the sticky notes and we want to get that 5 Bruin Cache reward, we're going to be crouching here and then dicing, and then whoever lands the magical number on the dice gets to process the transactions and get 5 Bruin Cache. And so what's like the analog for sticky notes inside of Bitcoin? So sticky notes were basically a representation of pending transactions. So before a block was processed and I wanted to say that I wanted to send a certain amount of money to someone, I put that on a sticky note and put that on the board. So in the cyberspace, how this works with Bitcoin is that pending transactions, which are like sticky notes, go into something called a mempool. And so when somebody wants to process these transactions for the block, they look into the mempool, and then they take transactions there, and then they find the magic number for the block, and then once they find that, then they can process those transactions and get a reward for it. So since a pile is basically a block now, because a pile is all of the processed sticky notes that we made, right? But in reality, with Bitcoin, instead of calling them piles, we call them blocks. And then these blocks are processed transactions, just like they are in Bcash. So with these blocks, every single block is going to have a series of transactions that were processed in that block. And instead of calling them like piles being processed by me, they're just like blocks mined by anybody in the network. And you might also be wondering where the whiteboard is now, because there's no like physical thing that people are changing the balances of, right? But if you kind of think about it, if we all lived in different places, we could still have a way of constructing this whiteboard ourselves, because if I gave you all the piles of sticky notes in order in which they happened, you can make the whiteboard yourself. So if I gave all these piles of sticky notes to everybody and they went home and then they just went through them one by one, everyone's going to end up with a whiteboard with the same balances for everybody, right? Because you're looking at the same, sequence of transactions, and then if you know how to do addition and subtraction, you're going to end up with the same numbers as everyone else. So in reality, it's not a human being rolling dice to find these numbers. They're actually a bunch of these very powerful computers. They're very specialized. They're called ASICs. It's a kind of like chip that is customized for a single application. In this case, they're basically created just for mining Bitcoin. And so what you kind of see is these warehouses of these ASIC machines running, and you would call this Bitcoin mining. Now I'm going to talk about soothing the mind and falling asleep at night. Yes?
About the halving, is the thing that enforces the halving, like, that enforces that whoever mines the block can only, now send 3.25 Bitcoins to himself? Is that, like, just directly in the Bitcoin software? It's just if the current block number is greater than this, then you can only withdraw this much? Or, like, add the transactions to this much? That's what it is?
Yeah, it's in the software predetermined.
So for like each number of blocks, it's like, if the current block is greater than this, now you can write a transaction for this much. If it's greater than this, you write a transaction for this much.
Yeah, exactly. So this is the Fed meetings where the Fed basically talks about if they're going to increase, keep rates the same, or decrease them. And then something you notice here is that at the bottom we have probabilities. So right now they think that there's a 77.5% chance that they're going to keep the rates the same at the June 12th meeting. But if you look at the 1 month down there on the right, a month ago there was people thought there was an over 50% chance that they were going to cut the rates. But then today it looks like they're basically not going to. So there's a huge uncertainty around this very important aspect of the economy, and this is I'm gonna get into some details later about like certainty and uncertainty, but I'm just trying to paint a picture in your mind here that something so fundamental to our economy is actually always in flux, and we're always uncertain about it. So with that being said, does anyone know what the M2 money supply will be doing in April 2026? Nobody knows. Will interest rates be increasing or decreasing in April 2026? You got it. Nobody knows. How about this one? At what rate will the supply of Bitcoin be increasing in April 2026? We know the answer, and the reason why we know the answer is because of that schedule I showed you. Every 4 years, there's like a halving, and then at each point in time, we know how much Bitcoin is going to be generated per block. And then with some simple math, we know that each block is made in 10 minutes on average. And if we know how much Bitcoin is generated in each block, then we can just go from minutes to hours to days into the year. And then now we know the rate at which the supply of Bitcoin is increasing. So this is a screenshot of the dorm cost at UCLA. I paid this last year. And what happens is you pick what kind of meal plan you want, and then you pay in the 3 quarters. You pay this amount of money in September, this amount of money in December, and this amount of money in March. So this is predetermined at the beginning of the year. When you sign the thing, this is going to be the price for living at UCLA. But what happens if I change this March installment and I say that instead of that predetermined number, I'm going to tell you that it's a number between $6,000 and $86,000. Would you sign this lease and live in this place? If you're actually thinking about this problem, suppose it's a uniform distribution. So the probability that you need to pay $6,000 is the same as the probability you need to pay $86,000. Now the answer is certainly that you're not going to sign this thing. It's the same thing at the other side of the table. So if you wanted to get a loan for a house, a mortgage, if you do a 30-year fixed rate mortgage, the rate is 7.8% interest. If you do it for 15 years, it's 6.9%. And we want to think about why one number is lower than the other. And it ultimately comes down to risk, because the reason why the 30-year is higher is because if we're talking about that second half of it, so the second 15 years, anything, if I took out this loan, anything could happen to me, right? So the first 15 years, both of them have it, but then only the blue one has a second amount of 15 years. So in that second interval of 15 years, I might lose my job. All of my crypto might go to zero, or some terrible things can happen. And so that needs to be reflected in the price that I'm given today, which is manifested in an interest rate number. So I'll do a little side note about the concept of something being priced in. So we can think about it through the stock market first. So information already known is reflected in the price. Expectations for the future are accounted for in today's prices. So if we know that something's going to happen in the future, we don't need to wait for it to happen for the prices to change. It's the instant that we find out that information is what's going to make the price change. So think about a financial or earnings report. People kind of like sit on the edge of their seats when these things are about to drop, and then we're going to see if some company beats expectations or they fall short of expectations, and that's obviously going to create a change in that stock's price for the day. So there's this notion of the date an event is known versus the date the event happens. So if we looked at NVIDIA stock and we randomly see a news article saying that Jensen's stepping down in 2025 and he's cutting ties with everyone, we don't need to wait for 2025 for the stock price to go down. It's going to go down today when people find out that news. And a real example of this happening was last week when the CPI report came out, higher than expected, and then we see the markets adjust to that. That new news is we would call being priced in. Another point I want to make is that sometimes people who like Bitcoin would say it's a great hedge against inflation. But if we look at this graph of Bitcoin and the US dollar, it's going up, down, up, down, down, up, up, up. It doesn't look like a very good hedge against inflation, but what you really need is like a perspective shift. So let's say I lived in Argentina. This is the price of Bitcoin to the Argentine peso, and from the graph you can see it's just always going up, and because these things are always relative, right? So what this is saying is that like the relative inflation of that currency is greater than the inflation of the US dollar. So this is why you're going to see different charts based on the kind of currency that you're comparing Bitcoin to. And so holding Bitcoin could be more useful for someone living in a country like Argentina, Turkey, Nigeria, compared to here. So if I lived there, I would see more value to Bitcoin than if I lived here, where my dollar is relatively stable. And if I held Bitcoin in one of those countries, it would help me sleep at night. So this gets into the point that certainty soothes the mind. People who love Bitcoin love that they won't wake up one day and see that Bitcoin inflated away. If there's a group of people in the government who say they want to print more of it or they want to stop printing it, right? So the rules are the rules. That schedule you saw earlier about how much Bitcoin's coming in and under what conditions is absolute, and that's just the rules. There's no person or group of people that can print Bitcoin for themselves whenever they need it. So it's just math. There's no human decisions. You'll look at that table and then do the math yourself. So not even human corruption can change Bitcoin. So even if the inventor of Bitcoin, Satoshi Nakamoto, came out of the mist and back into this world, there's not much that he can do to control Bitcoin more than any other person. So now, I think you'll have a good understanding of how we view this Bitcoin halving event. That's happening today, by the way. And it happens approximately every 4 years. So this is a pretty significant day. If you're here today and you don't know what this is, you're here on a pretty monumental day. There's people who have parties around the world for this kind of stuff, as you would for like anything that's 4 years, right? Usually this is something that's significant, like high school graduation, college graduation, or like a presidential election. So this is a pretty big day. And since we already have the clock up here, Bitcoin halving is in 6 blocks. So what this means is that once we produce 6 more blocks, so there's going to be, this is going to happen 6 times where someone's going to look at pending transactions and they're going to take them and they're going to process them and make into a block. Once this happens 6 times, the block reward will halve. And I'll show that real quick here. Okay, so this is something called a block explorer, and we're looking at it for Bitcoin. This just lets us see the Bitcoin blockchain. And if we look here, these are all different blocks. So it's kind of like if I was looking at the piles in Bruin Cache. These are all different piles of transactions. So if I were to click into one of them, I'm going to see a list of transactions. So in this pile, or this block, there's 2,600 of them. This one, there's 2,700, and so on. And if we look at this column here, it tells us the block reward, which is currently 6.25 BTC. And then here, we see that the block height is 839,994. And on the screen, the Bitcoin halving is in 6 blocks. So if we add those together, we get a round number. And what happens is, in the Bitcoin code, it's basically saying that at block 840,000, there's going to be a halving. And so once this number hits 840,000, this block reward is going to go from 6.25 to 3.125. Does everyone kind of understand that? So that's the halving. So if you found today's presentation interesting, I encourage you to think about a few different questions. So what do you think happens to a mining business when there's a halving? So there's people who make a living when they run a business and they buy all these ASIC machines or these computers and they host them in a warehouse. The reward, their income for that business is basically new Bitcoin, right? Because every time they process a block, they're going to get that block reward. And so if the halving happens, that essentially means that their income is cut in half. So what do you think happens to them? What kind of miners, basically the people running these businesses or machines, what kind of miners are more or less likely to stick around when this happens? And do you think this will make Bitcoin less decentralized as time goes on? And now that you understand how halving works, if you ran one of these mining operations, how would you manage the Bitcoin you mine? How would you decide to sell to cover your expenses? And would you buy or sell more of these ASIC machines? Some stuff to think about. So yeah, thanks for coming. The food should be about to be here. So yeah, thanks everyone.